Will the next decade be easier or harder in terms of regulation?
Depends on who's in control of the House, of the Senate, and who the president is. If you think about...
Even in a worst-case scenario, though, is it reasonable to say it's hard to go back to how it was at the start of the decade for banks?
Certainly. I think if you think about the start of the decade, regulations were pretty tough. Capital levels were lower. They've built quite a bit. And you think about all the new agencies that were formed, like the CFPB, that have put a lot of heavy regulations in place. Some of those regulations have changed. Some of the regulators have changed. And I think administrations are responsible for that.
And in terms of the shape of the U.S. banking industry, do you think that we've seen a couple of deals like the creation of Truist from BB&T and SunTrust? Will there be many more of those? And why haven't, in fact, there been a few more than there have been?
Sure. Clearly, scale matters. The industry spends about $150 billion a year on technology. So BB&T and SunTrust got together so they could step up and really use that and save $1.6 billion. But the regulators really don't want too many large, financially significant companies out there. So I think there's been an anti-merger move out there, and I think there'll be some regulation coming in the Senate. It's not going to pass, but they really want to limit the size and scope of some of the biggest financials. In
terms of the year ahead as opposed to the decade ahead, what's your view on the interest rate outlook and how that'll play into the bank's earnings?
Well, clearly negative rates have been failed policy, and I don't think it stimulated anybody. And I think if Europe starts to spend money, we'll see rates rise. We'll see a better yield curve here. I think less uncertainty on China will stimulate some manufacturing activity. Clearly, housing activity is incredibly strong, and that's certainly helping the economy and the banking sector.
So do you want to be focused in the U.S. towards the regionals who are more geared to that, or some of the bigger guys, the investment banks?
I like the regionals simply because there will be a lot of consolidation, but it's going to be not among the biggest of the big. Maybe we see one more deal. Maybe we see a Fifth Third or Regions, somebody like that involved with getting together with a U.S. Bancorp or a PNC. But I think you're going to see lots of deals among the smaller companies. And we've just seen a couple of pretty good-sized ones. We saw Iberia First Horizon create a $70 billion company. We saw one in Texas with Texas Capital and Independent get together and create a $48 billion company. They're underneath the radar, but those are pretty good-sized deals and creating some really good efficiencies. And you're seeing markets that are strong like that also attract business. There's better growth. Some of the bigger banks may want to get into some of those markets where they don't have exposure.
One of the big events in January, apart from earnings, will be the Goldman Sachs Investor Day. What are your hopes for that, and is that stock attractively priced in your eyes?
Well, the stock has certainly been attractive for quite some time. I think the real cloud is their settlement over the one MBD issue, and it's potentially big, right? They have a settlement in the U.S., they may have a settlement abroad. Everybody'd like to get that cloud away from them and focus on the business. And the real question is, what is Goldman Sachs? Is it a consumer lending company? Is it an investment bank? Is it an industrial lending company? What is Goldman? What is the new Goldman? So I think that Investor Day will be really important to lay some of that out. I mean, look at the Apple Card, right? That's been both a plus and a negative for them so far.
Anton, thanks so much for joining us.
My pleasure. Good.